Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Mondays at this time, I normally just speak with Llc, but this topic is going to be one where we have Llc and Dion from Dion Talk talking. Before I get into the topic, let's just welcome the gentleman to the show. Llc, how are you?
Great. Happy to be here. Really excited to discuss with Dion in person.
Awesome.
And Dion in person.
And Dion, how are you?
Howdy. I'm doing great. I'm ready for bonus round. And I was kind of looking forward to this. I watch Llc all the time, so it's kind of neat to get to interact.
Awesome. So folks, if you know anything about Dion and Llc, you probably have put two and two together to realize we are going to talk about LLCs. I'm going to be the gentleman that plays referee in the middle. Llc is going to take the pro, and Dion will take the con, kind of simply speaking. But I think what you are going to see in this conversation is we are really talking about understanding who you are as an investor, what you are trying to accomplish, and what you are trying to prevent. So Llc, as the resident attorney with more education than both Dion and I put together, why don't you just real quick define what an LLC is, just in case somebody doesn't know, talk about what an entity is and all of that, and then we'll get into the real estate aspects.
Yeah. So before we get into it, big fan of Dion. Number one, you're doing the work. That's the most important thing. I love that Dion highlights that. I really love the cryptocurrency video too. It was one of my favorites. So maybe we can have another crypto discussion, but today we'll stay focused on LLCs.
Okay.
So what it is, it's a business entity, I guess. It's the simplest form. It's just a limited liability company is what it stands for. And it's a way to form a business that limits the liability to whatever is in the LLC itself, and protects liabilities from spilling beyond that to other assets.
Yeah. So from my standpoint, and we'll get to Dion in a second, I just want to kind of be in the middle of this. One of the things in the real estate industry, right? The overall industry, all the gurus and all this and all of that. One of the things that a lot of newbies hear is you must have an LLC. You must have, thou shalt have this, that, the other. Some gurus, not Llc, but gurus talk about, you got to have one LLC per property, and they just spin this yarn. And even worse, some of the gurus out there talk about you have to have all of this before you even own a property, which always drove me crazy. So with that additional color, I totally get, I have LLCs. So again, I am a purveyor of them. But Dion, why don't you go ahead and talk about kind of where you sit just with this overarching umbrella of an LLC.
Okay. So Llc, I want to thank you for taking the time to come on here and do this, to shed some light on this and get people thinking, because that's the goal, is that people think about this without getting blocked into this, I have to do it one way. Because in real estate, we all know there is no one right way, but there is a one right way for you. And I will be transparent. I always am transparent on my channel. So don't sue me, bro.
Yeah.
So I want to take a legal moment to talk about why Mike usually doesn't talk about LLCs on his channel, because he is not an attorney and we don't want to get sued for giving financial advice or legal advice. So I am not an attorney. And while Llc is an attorney, he is not your attorney. This video is for entertainment value only. And hopefully you can get some takeaways to know what research you need to do.
I appreciate you doing the disclaimer for me. That's something that I probably should do, but I think it's obvious that the show nature is just for entertainment.
Correct. And it's usually in the show notes anyways. To be transparent, I have LLCs. I run a trucking school that's in an LLC. I'm a 10% owner of this trucking school. I have a nonprofit that does job placement assistance. I have that in an LLC. None of my properties are in LLCs. And of the over 20 investors that I know personally that have over a net worth of $1 million in real estate, Michael Zuber is the only one I know who has his properties in an LLC. Matt the Lumberjack Landlord, 112 units, no LLC. You don't need an LLC for the reasons people say you do. Some people say you need to have an LLC so you get tax benefits, of which there are none. They say you need it for legal protection, and if you're a sole proprietor, some counties, not everywhere, so there are some counties where it's still a thing where you have to pierce the veil, but some counties are blanket disregarding single member LLCs. Pierce County, Washington, Thurston County, Washington, the two that I know of that just as a general rule, they don't exist because of the precedents. precedents started, and as an attorney, you know, precedents. And I'll clarify, you're probably going to win this argument. Your job as an attorney is to win arguments. You go into a courtroom, that's you present your side in the way that's going to win, which makes you a master debater, and I'm just a baiter. I'm just trying to bait people into thinking, right? So here's the precedence. In 1996, the IRS determined carte blanche, 100%, all single member LLCs are disregarded entities. So there are counties in the United States that are disregarding single member LLCs. You don't have to pierce the veil. That's the thing, that's the phrase we use because it's the most common. So if you do a Google search, you'll see that there's all these law firms that say piercing the veil is more and more common. So you also want to have the other three forms of asset protection, which I would like to talk about before we wrap up the video when we're at the end. Whether you have an LLC or not, there's three forms of asset protection you can be using. So we talk often about the cheat code to wealth. I can reach financial freedom in 10 years or less, make it a lot easier by using house hacking. If I'm going to buy a property in an LLC, I lose the ability to own or occupy house hack. So we now lose the entire cheat code to wealth out of the process. Unless you say, let's commit fraud, like a lot of people suggest.
Oh, yeah, don't do that.
Buy it in your name and then just put it in your LLC. Like you're not going to trigger the due on sale clause. And that lender who gave you that rate and that down payment because it was a property in your name that you were going to own or occupy is now not in your name, is going to be okay with that because your broker said, oh, they'll probably ignore it. So that's just a couple of the first few things to touch on, that piercing the veil is more and more common. You can't house hack, you get worse lending. There are times it makes sense. If you want hard money, almost all hard money lenders are going to require an LLC. Most commercial lenders will require an LLC, but you can also use a trust. That's how Matt, the lumberjack landlord, gets around needing an LLC for commercial loans. So I don't care if Rylas has an LLC. I don't care if Mike has an LLC. I don't care if next year I decide to get an LLC. My concern is that investor that doesn't have a property yet is just figuring out, how does lending work? What is the debt to income ratio? How do I figure out the yield, right? And they start with rental income and mortgage, and they forget about everything else. So they're learning all of these things. Then you hear this morning twice in the real estate rookie group, 2 questions. Do I need to have each property in an LLC? And if I have properties in more than one state, do I have to have LLCs in each of those states? Those were 2 people who do not have one property yet, stopped in their tracks because they think they need an LLC. That's who I'm trying to talk to, not to the person like Matsky Finance. He did his first 10 properties in his name with no LLC, became a successful investor, and now he is a defender of the LLC. He wouldn't have any properties if he started thinking he had to have an LLC. He wouldn't have taken the time to learn. So I'm gonna turn it over to Rylas. That's my initial thoughts.
Yeah, so I guess some I agree there, some I disagree with. We can touch on the due and sell clause because I don't think that's as big of an issue. But I guess backing up a little bit more than that. So my background is an estate planning attorney. So I've had this conversation literally maybe hundreds of times, seriously. You know, I see, if not hundreds, close to. I see about 12 new clients a week. I've been doing this 10 years. So
yeah,
a lot of real estate investor clients. The question comes up a lot, you know, what should I do with my real estate, with my rental real estate? So, you know, with my attorney hat on, my advice is, and again, so that's where, again, I see, you know, thousands of people at this point, and most of them have their real estate in LLCs. So I'm in Arizona and California, so maybe it has some difference. Local economy, local laws could affect the business entity of choice there. So that could be part of it in your local climate. But anyway, I do see most people holding assets in real estate simply to separate the liability, meaning if something goes bad in one house, so if you have 20 houses, you've just increased your liability, right? You have 20 people who could potentially sue you.
Whether you have an LLC or not. Correct.
Now, it's important to run the LLC properly, right? It's important to run it, not treat it as, you know, don't commingle assets. Jonathan Twombly and Michael did a great video about it. So I'll just kind of echo what Jonathan said. It's important to run your LLC correctly to get those protections.
Yeah.
In that video, Jonathan pointed out where an LLC would protect you if a lawsuit hit $3 million, because your insurance only goes up to $1 million, which tells me that Jonathan invests in syndications, not rentals.
Yeah.
Because that's the purpose of an umbrella policy.
When it goes above the policy on the property. Jonathan's background that I really appreciate is that as a litigator, right?
Yes.
Is as a commercial litigator.
That's his thing, yeah.
So who better to tell you what it's like to actually pierce the veil, right?
So Jonathan defended Fortune 500 companies. He said this himself, and then he was in hotel law. I guarantee if you're a Fortune 500 company or you own hotels, you have an LLC. Oh, you have partners. You probably have multiple partners.
Yeah. So let's first kind of separate Jonathan, right? Jonathan is a syndicator. I think his smallest deal was 100 units. He's having an LLC for each transaction. And I would tell anybody involved in those, you want an LLC for each transaction. Jonathan's not talking to the investor who buys one single family home, at least I was a party to the conversation, right? There are different levels. So if you're going to do anything over 100 units, you're going to borrow money from 100 other people, get an LLC or an S Corp or something else. Don't do that in your name.
One of the problems I have with Bigger Pockets, and I'm a Bigger Pockets fan and supporter, right, is that they are trying to compare their current year 20, year 30 to someone's year 1. So they came out with the Real Estate Rookie podcast where you have to have 10 deals or less, and they're doing that. What I really like about One Rental at a Time, the Lumberjack Landlord, and my content is we're trying to talk to that person who's getting the first deal, trying to get them to 4. To get to 4 rentals, if you absolutely think you have to have an LLC and it's a barrier, that's who I'm trying to talk to. Jonathan had great points on the scale and the size and how many partners you have and when it makes sense to have an LLC. And Rylas, it makes sense. As a litigator with clients, you're going to interact with people who have their properties in an LLC. At the beginning of the video, I talked about the over 20 investors I know who have net worths in the millions, and I know 1. So 5% of the investors have their properties in an LLC. So you might be seeing, I don't want to say pigeonholed or tunnel visioned, that since they're dealing with an attorney, they're going to have an LLC. You also, as an attorney, would think that if you're going to be in court, you should have representation. And I'm going to dispel that myth. If you have an LLC, you can't represent yourself. You have to have a representation. I've been through 2 divorces, and here's my overshare for the day, which I hate to do, but I love these. I've been through 2 divorces. Both of my spouses had attorneys. I did not. Guess who won the house? Guess who won custody of the kids? I've never lost a court case through 2 of my own divorces because I wasn't represented by an attorney. An attorney's job is to create conflict. The profit for a law firm is on billable hours. So yes, when I say something like, I don't really like Bitcoin, a Bitcoin investor feels threatened because I attacked their source of income. When an attorney hears somebody say, hey, new investors, until you have maybe 10 or 20 properties, or maybe even just 5, you don't need an LLC. You don't need that barrier to getting into real estate when there's already enough barriers. Like you said, don't commingle finances. Somebody has to research, how the F do I pay myself with my properties in an LLC? Like that's a concept they don't even have yet. And you want to put that barrier in front of them too.
So here's a question. Let's play devil's advocate.
Oh, please. That's why we're here.
So what are the downsides to the LLC?
You can't owner finance and occupy a property. Your rate's going to be worse. You're going to get commercial lending, which is not as good as residential lending. Now you can do trust loans where you can get it better, but imagine you were a
so financing. So financing is that your sole?
Financing is bad. You are more likely to be sued if your property is in an LLC because businesses have deeper pockets than a person does. So if I am Dion McNeely who owns the rental and I'm living in unit 1, unit 2 is not likely to sue me because that poor guy's living in the same unit we are. But if I have ABC LLC, that's this massive corporation that has deep pockets, I'm going to sue the crap out of them. So more likely to get sued, more likely to be audited because you are a business. And I'm sorry, my speaker changed. Sorry.
No, so let's load it. Let's not just hit it with 7
lending.
things. Hold on. Dion, can
more
you hear me?
likely to get sued.
Dion, can you hear me?
You have to not
I can-
commingle finances. I have 16 rental units.
I can hear you, Michael.
No sound.
Dion, can you hear me?
I can hear you. Can you hear me?
Okay, yeah, we heard you just fine. I just want you to slow down. I don't want to hit him. I don't want to hit him with
Sorry.
7 things.
This is a subject I'm passionate on.
I could tell just a
Right,
little.
but it's because I
Yeah.
think Riley should have LLCs. I think you should have LLCs.
Mhm.
I think John Smith, who's thinking, I want to buy a house hack,
Yeah,
couldn't have LLC on his radar.
I get it. I get it. And I'm trying to support you as well, but let's
That's
have,
okay. It's both sides, right?
yeah. So let's keep this as Joe Schmo, John Smith trying to get his first unit. Right. That's where I want this to be. Because again, I see the questions all the time. But again, I refuse to answer them because I'm not getting it.
Okay.
I'm not jumping in that hornet's nest.
Yes. So we got financing.
So let's
use
just talk about-
more likely sued.
So let's talk
and,
about Riley, one at a time. Financing, right? As you know, getting financing as an owner occ, meaning your name, it's better rates today than in LLC. When I started investing, they were treated the same. Today, very different given the Great Recession. So again, talk about the house hack. You and I have talked individually about get it in your name, then transfer, and then, hey, if you get caught, transfer it back. Is that mortgage fraud? Is it not? There's some opinions there. You want to talk about that?
Yeah, I'll say no. I'll say financing is not an issue. I'll say, owner occupied and renting it. Yeah, definitely. Right. That's a big deal with the bank. You got to be clear what you're doing with it. But if it's going to be a rental property where you're not occupying it, here's the question as a lawyer. I think it's at least enough where you can, it's at least debatable, but did you really change the ownership if you transfer a property into an entity that you still solely control? It's still Dion's LLC, right? If it goes from Dion personally into Dion LLC, which are the sole member manager,
The discretion of the lender, that can trigger the due on sale clause. So
it's always in there. Now I understand that it's always in there, and it's just a way that banks work. It's like a comfort blanket that they can't leave behind, right? But if you ask them about their blanket, they're not going to want to talk about it, and they're not going to want to give it up. It's just going to be in there every little time, but they just want maximum protection. It's kind of like attorneys call it battle of the contract, right? You could battle it out. Let's have these terms. Let's have these terms. And it's just kind of accepted. If you work with these banks, you got to follow their rules. But again, I would say you can make the argument, did you really transfer it? Now, in my experience, I've seen people try to ask the banks. I've seen 3 people try to ask, and that's 3 no's. I've never seen people get a yes answer on that.
Mm-hmm. Yeah. So there's a couple of things on this, right? This, again, Rylas is the attorney in this example. And, but again, my opinion, my experience, it's not something I'm comfortable doing. But I understand where you're coming from. And again, you could always go, oh, shame on me, slap my hand, I'll transfer it back. Right. But
so that's just the due on sale clause.
And not everyone is comfortable with that. That's just something I just explain it and let
of
people
course
choose. I say I recommend it. As long as you're clear if it's owner occupied or not, I think that's
yeah,
So
you definitely have to be
Smith-
clear there.
If John Smith goes to buy a duplex that he's not going to live in, this is going to be an investment property. He's brand new. He doesn't have rental income on his tax returns. This LLC doesn't have 2 years of income. So the lending products available to that LLC are very bad compared to the lending products available to the person buying the investment property in their own name that they're not going to owner occupy.
As of today,
Rate's
yes.
going to be higher. Your down payment's often going to be higher. So lending is a problem with an LLC. So that's my opinion. You said you might not trigger the due on sale. You were fine with that. So the next thing was,
What do you think about, hold on, what do you think about that, Riley?
There are some lending issues. True, there are some lending issues.
Yeah, income and all of that. Yeah. Mhm.
And the due on sale clause, it is kind of a bugaboo, whatever you want to call it. And if you're not comfortable with that, then
It's gray,
then-
not black or white. It's gray.
it's a gray area.
Yeah. Okay.
So
So,
the next
okay,
thing
due
would
on
be-
sale, down or getting a loan, different. Again, that could change.
And
Lending could change.
I would say I'll add to the financing, refining, right?
Oh, refining. Yes.
If you have a property in an LLC and you transfer it in there, If you're going to refi, you should transfer it back out in your name personally to refi.
That's
Yeah.
what Beth Traverso is doing right now. I believe I saw her say in a comment, she has to take 2 out of her LLCs to refinance. So
Yeah.
a couple
Yeah,
more barriers there.
That's part of the maintenance, I would say. If you're going to go down this route, there's a little bit of maintenance,
Mhm.
but that's part of the, in my view, that's part of the cost.
Correct.
Okay,
Okay.
so, sorry,
Yeah. So do you want to do one more, Dion? Because I have one as well.
go ahead.
Yeah. The one that and again, my annoyance is with the guru culture of real estate, the back of the room event conferences, getting the John Smith in this example, who has nothing, so afraid that he does this first. That's the culture that bugs me. And what bugs me most about this is the person at the front of the stage is not telling John Smith all of the maintenance, overhead, rules it takes to validate an LLC, right? Segregation of funds, taking corporate minutes, all of the extras that come from having an entity. Because again, the last thing you want to have is an entity that is easily pierced or whatever the right verbiage is. Because then it's like, well, why did I spend all that money? It's not giving you, because what an LLC is to Mike Zuber, in my opinion only, is it's a risk mitigation strategy. You are creating piles of capital that you are comfortable potentially losing. And when you get to my stage, you're not comfortable losing everything because of one thing. But when you have nothing, who the cares? That's what bothers me. So for me, Rylas, I don't think the industry, not Rylas, the industry does a good job of talking about what it takes to maintain and run an LLC correctly. That's Mike Zuber's opinion. What do you think of that?
I agree. And you got to make sure it's registered in the right state too,
Yeah,
right? You gotta make sure you're
exactly.
running it properly. They get sold a Wyoming LLC, but they own properties in another state.
What is that about? I know. LLC is a land trust. And I knew somebody, sorry, this is just a rant, who spent almost $10,000. They're tech workers. They had some stock money. They created 3 LLCs, 2 land trusts, and they own nothing. I'm like, what the hell are you doing? That is because of the guru culture and the fear-based and all of this.
They got sold a big package on.
Yeah, and Wyoming was in there. I don't know what it is about Wyoming, but I don't get it.
They have some privacy laws, but again, you got to register in both states. And with real estate, the real estate's physically located in that state, right? So it's kind of hard to say you're not controlled by those laws.
So we have lending, and then we have, so asset protection is another, what we're covering now, where people structure it. I think trust, that having a trust it becomes really key once you have those, because it's better for inheritance and everything.
Yeah.
But let's talk tax benefits.
Well, hold on. I don't think we closed the maintenance. So,
Okay.
Rylas, would you agree that there's more that there should be more education around what it takes to run an LLC properly, so you are not at risk of being pierced? Do you think that's a fair statement? Because I don't see a lot of that stuff. But maybe
Yeah. Like don't still have a CPA, right?
Mm-hmm.
Listen to your tax, a good tax advisor on what you can deduct, and not the gurus on the internet. So make sure you're following the structure.
Mm-hmm.
Make sure it's registered to do business in all the proper states.
Mm-hmm.
And otherwise it's worthless. Make sure your properties are actually deeded in the LLC.
Yeah.
I see that a lot.
I've seen that
I
too.
have an LLC, but I haven't transferred anything into it. It's like, well,
Yeah. What the heck? Yeah.
So hang on, you can transfer the mortgage into the LLC, but they don't also then transfer the deed into the LLC?
they never transfer the property into the LLC. The mortgage is just attached to the property.
Right. You just got to
Which
move
is
the
why
property.
And the reason why I'm not worried about the due on sale clause is because you haven't changed the security interest of the lender.
Correct.
They still have the security interest. They're going to foreclose, whether it's in your name or an LLC. They still have the same interest. And again, that's where I play in Arizona, California.
Okay. Yeah. And again, I think there really does need to be more education on the maintenance. I've not seen any attorney or accountant, or maybe it's a pair of them, say, hey, here's the 7 rules of the road or the 5 must do's. Because again, if you're having LLC, you've done everything right. but for example, all the money goes into one account and you have 3 LLCs and your personal, good luck.
Or as simple as you pay a vendor out of your personal checking account
Yeah, it's
at one time.
Yeah, that is the risk mitigation that you were hoping for has not done squat. Is that close enough to being accurate, Rylas?
Yeah, I see a lot of people with LLCs that aren't getting any protection because of one reason or another like that.
Yeah. Okay. So again, I think there needs to be a lot more education on the do's and don'ts of all that. Dion, you were going to list one more, I think.
So we were on the cons.
And then Rylas, I want to be sensitive. You're an attorney. Do you have something at 9:30?
I got about 10 more minutes. I got
Okay.
a court hearing.
Nope, I just wanted to be sensitive.
Well,
Right, Dion?
let's move on from that then to the tax benefits. Rylas, can you tell me the tax benefits of having your property in an LLC?
You're correct. You nailed it. It's a flow through entity. So it's the same, right? So technically there are no tax benefits. I would argue this. I would say talk to your CPA, but I would say that it's probably easier to deduct more through an LLC versus just a schedule.
CPA told me the opposite.
So
CPA told me it was the opposite, partly because I have LLCs for the trucking school and the nonprofit. But with rental properties, I get to write off a home office. I get to write off the vehicle that I use for those rental properties. I get to write off the meals if they're associated in any way with the rental properties. Everything is exactly the same. I'm more likely to be audited if I put it in an LLC. He said, if you file your taxes by yourself, you're more likely to be audited in any way. Of course, any CPA is going to protect their income that way. But having a professional, because tax mistakes happen when you file yourself. Tax fraud happens when you do it unintentionally. If two people, the professional and you, commit tax fraud, that also includes a conspiracy, which is a higher level of law breaking. So you're less likely to have an audit if you have an LLC and a CPA, or no LLC and a CPA. Having somebody else file your taxes helps reduce the risk of audit. But having an LLC makes you more likely to get sued and more likely to be audited.
yeah. So here's what I want to say about asset protection. There's no one magic silver bullet that can get through anything. There's no magic, people come to me a lot of times they're like, I want something bulletproof. I want a bulletproof trust, no one can get into. Like, that doesn't really exist. The goal in asset protection is to put yourself in a position where, if there is a liability, you're protected in a better way than you would be without that planning, whatever it is. So it's not like it's a one, end all be all strategy, but I view it as a layer of protection. So,
yeah.
Okay.
Yeah. Go ahead, Dion. You want to say some?
So to kind of wrap
thoughts?
up my thoughts, I want to cover the 3 forms of asset protection that I do use, and then respect Rylas's times because I know we got to get out of here. But the first thing is insurance. You have insurance on each property with a certain amount of coverage for injury. So I do 300,000 slip fall on each property. So each property has their own policy, full replacement value. At about 4 properties, I probably could have done this at 3, but at 4 properties, I picked up an umbrella policy. So if there's ever a lawsuit that goes above the threshold of the insurance on the property, it then triggers the umbrella policy. $550 a year for $2 million in coverage. So insurance is just step 1. Step 2 is I use leverage as a form of asset protection. 6 of my 7 properties have mortgages on them, so the banks are in first position. It's not the best asset protection, but no one else is likely to get that actual asset because the bank is in first position. And the third and most important form of asset protetion is to fix stuff.
Be a good operator.
Listen to your handyman and say, look, is that a safety issue? Yes, spend the money, fix the thing. Listen to tenant complaints and issues, figure out the fire, flood, or blood, that gets responded to immediately, and then the things could be put on the back burner. But those 3 things to me help me sleep at night like a baby. Having my properties in an LLC would have no impact on my assets being separated. I'm a sole member LLC in the counties I invest in. They're disregarded. They're not pierced. Somebody doesn't have to prove I commingled finances. When I show up in a lawsuit with my properties, they're all my assets. Every one of my assets, every one of my LLCs would be my asset.
Very cool.
Yeah.
So,
and then Rylas, you want to give your final thoughts and I'll close it up.
Yeah, so I like those things. I'm not saying don't do insurance. You always want to do insurance as well. But the thing, insurance, they got a team of lawyers and it's their job to find exclusions or why you're not covered. So that's one thing you got to be concerned about with insurance, or if it goes beyond. And again, I'd say, so the downside of LLCs, if you can get over the bugaboo of the due on sell clause, right? If you have so what would the other downsides be?
Higher interest rate, can't represent yourself in court, insurance costs more. A couple of different things I've been quoted on. My insurance rate went up about 5% if I talked about putting it in an LLC with the agents I work with. So there's like a list of reasons why the LLC has problems.
Do you have profits in your business, Dion? Would you be able to deduct all those things?
I deduct all of the profits with my rentals with it in just my name.
But I'm saying if you had higher expenses, would that hit your bottom line?
Never have an expense for the tax benefit. Take the tax benefit when you have an expense. But that's like saying I want to have a mortgage so I can pay interest so I don't have to pay taxes on it. Well, that interest is going to cost you more than that tax benefit.
Yeah.
So,
well, I would say there's a benefit from it. I think there's a benefit of the separation.
So to pay more for insurance for the exact same coverage for the tax benefit, to me, is not a good strategic.
Well, yeah, as an attorney, we're a little jaded because we see when everything goes bad, right?
But it's the same insurance policy.
Let's not talk about insurance, Dion.
Okay.
Calm down. Right.
Well, I mean, that was what Rylas was saying was, wouldn't it be worth paying more for insurance?
I got it. I understand. I got it. Rylas, go ahead.
I'd say there's layers. I would say, an LLC would be another layer that would give Dion more protection in his plan. And then to go beyond that, is if you could keep yourself anonymous with the LLCs, adding one more trust on there, because you said LLCs might make you more likely to be sued. If they if you can keep the owner of the LLC anonymous, so that way they can't easily look up and see, oh, this person owns 10 other properties or they own all these other things.
They don't care about the person; they care about the LLC. People don't go on someone's driveway and
attorneys care about getting paid. They're thinking, if I'm going to bring a claim, what is the likelihood that I'm going to get a return? So if I spend my time and invest in this lawsuit and there's no assets behind this LLC or this person, then it's a waste of time. But if they can see, ooh, Dion owns 10 other things. Oh, look at this. Here we go. So,
that might be the lawyer's perception, but the person is the one who initiates the idea to sue. And that idea comes from corporations have more money than a person does. You don't go into, and I'm going to say Kmart because I'm old, and pretend to fall so you can sue the store director. You want to sue Kmart.
But they're going to go see a lawyer and say, I want to sue this corporation, and the attorney is going to ask for a retainer.
Yeah. So we've got a couple minutes. I want to be sensitive to your time. When I think about this conversation, for me, it all starts with risk mitigation. At some point, I hope all of you get big enough where risk mitigation is a real thing. I think of LLCs as one of those layers. For me, it's kind of layer one is being a good operator. That's where it all starts. Dion called it fix broken stuff, blood, fire, flood. Be a good operator. That's where it all starts. Number two, you absolutely need homeowner or renter's insurance for every property. It's actually part of the mortgage. You have to have it. I have had an umbrella policy since day one. So one unit, Dion said 3 or 4. I had it day one. And then on top of that, for me, at some point, LLCs are the right answer because you want to take your equity positions and you don't want one thing to destroy everything. My biggest gripe with this whole conversation or this whole topic, not this conversation, the topic, is people talk about the 20th year or the 10 year and paint this big picture of fear. And the person way down at the bottom who owns nothing doesn't do anything because they don't know what's going on. That is what pisses me off. If you have a net worth of 10 grand, it doesn't freaking matter. It doesn't matter. If your net worth is 20 grand, it doesn't freaking matter. At some point it will matter, but at 10 grand, it doesn't. So the last thing is, and I've talked about this, is the rules of the road to protect the LLC as being an entity, a actual protector of equity, is not well defined, and it should be. So Rylas, Dion, thank you guys for having this conversation. It is a lot of fun. One thing I will say in closing is you definitely need a trust since day one. You get a trust, because one thing you can guarantee is you will die. Not everybody gets sued, but you will die. So get a trust, protect the legacy. And if you're in California or Arizona, reach out to Rylas. How do you want them to do that?
They can go to rylasdana.com, find my websites there.
Awesome. And Dion, how can they find you?
For more terrible legal advice, reach out to Dion. Dion Talk Financial Freedom right here on YouTube.
Yeah, this is great. A lot of people, Dion, you're not, there's a lot of people in that position too. So again, I respect what you're doing. It all comes down to the risk, right? And you're comfortable with your risk strategy. So that's all that matters. So that's perfect. And I think, what we definitely agree on is don't let an LLC hold you back. It's not an excuse. Don't wait for it. Don't do that later. It doesn't come up until you own assets, and then you can consider your mitigation strategy.
Love it. Thanks, guys. I appreciate having this conversation. Take care.
Ciao.
Thanks.